From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli.
And I'm Nadine Blaney. It's a pleasure to be here with you to wrap the day on this Australian market, maybe around the region as well.
Yes, indeed. Well, today, locally, we didn't do much at all. Different story in Hong Kong, getting a big boost from the China stimulus. Remember that the mainland Chinese markets closed all week for Golden Week. But today we had the reaction, of course, to what we've been seeing in the Middle East, the impact to energy players, the China stimulus pushing a lot of the iron ore players higher, and the likes of, say, Treasury Wine Estates, A2 Milk, but elsewhere you had pretty flat movement in the banks, the consumer staples dragged. So it's kind of been a ho-hum day, you would say.
Yeah, a little bit of risk off, as you mentioned. Iran now saying that the attack on Israel is over, but fears obviously are growing about that wider conflict. And when we have, this type of specter of real instability in the Middle East, of course, we start to see the safe haven plays work, the US dollar, gold as well. And we're watching the price of oil. So that's pretty much it.
Yeah.
That's the Wednesday wobble.
That's the Wednesday wobble, the flight to safety and the stimulus boost over in China, which I should point out, I think I saw the last article I read that Hong Kong's up something like 8% and a big boost. Yeah, Chinese stocks in Hong Kong up more than 8% over optimism over these new stimulus measures. And so hedge funds and mutual funds buying a lot of China assets. I had some great conversations today with David Sokolsky, of course, who's always been a big China bull. But also some other people that are looking at
their names just escape you right now.
It's Wednesday afternoon. All right, let's get into how we looked at the energy players. Of course, following very closely what's been happening in the Middle East, and Santos as well had some news out today.
Yeah, but I dare say it's probably the price of oil that's pushing Santos up the most. It was the stock of the day, so we'll get there in just a tick. But Strike Energy up by 8.5%. It's quite a volatile stock. All relates to the price of oil. Ultimately, though, we've got demand concerns impacting the oil price. I mean, it's elevated, but way below highs of this year.
Looking at the miners, I mentioned, of course, the impact of the stimulus and a bit more movement going into iron ore. Really interesting when Fortescue was trading about $15 just over a week ago, I think. Now back at $20. BHP up by 1.2% today as well. But the consumer staples, I did mention that you have seen some of those China-related stocks like TWE and A2 Milk do well.
Yeah, it really stands in contrast to Woolworths and Coles, which are coming under fire as of late, in particular in relation to some of the claims being made by the ACCC. Tech, we did see tech come under pressure. Technology One, the one standout on your screen, up by 0.4%.
And a quick look at the top corporate stories. We mentioned Santos Energy signing a contract to supply LNG to TotalEnergies Gas Power Asia, also boosted by that move that you've seen in crude.
And Genesis Energy revealed plans to buy a 65% stake in ChargeNet, which is the country's largest electric vehicle public charging network. So that's a $58 million deal.
Change at the C-suite for KMD Brands, appointing Brent Scrimshaw as new CEO. Michael Daly resigned after 3 years at the helm, and interestingly, he's going to work in Brisbane.
Oh, okay. Privately owned commodities trader Louis Dreyfus has gained control of Nimoy Cotton, so its voting power has increased above 50%. So Nimoy's directors sold their shares to LCD and saying thank you for your support.
And meanwhile, hotel property investments unchanged, or just a slightly higher, I should say. It rejected Charter Hall and Host Plus takeover offer of $3.65, saying it was materially undervalued.
I think it's also worthwhile noting that ANZ has lost its appeal against the ASIC lawsuit. We did see the banks coming under pressure, but ANZ in particular has been found guilty of not revealing a share placement worth about $2.5 billion.
All right, let's welcome our guest, our Wednesday guest, Mark Gardner, MPC Markets.
How you going?
Very well, Mark. Let's start with what's happening in the Middle East. Very, very hard to watch that humanitarian crisis unfold, but big moves in the energy space.
Yeah, the last couple of times we've had this, obviously this has been going on for, thousands of years, but specifically this situation, about 12 months. The last two times it's escalated, it's rallied into it and then come off like 10 to 15%. So I'm a little bit wary as it stands at the moment with these stocks. I think you'll see them bounce up a bit, but I mean, I think everyone's a little bit news weary of this story, which is, I mean, sad. But however, the markets are pretty aware of it. It's not really taking anything by surprise, and I think it pulls people into being long at recent highs.
And there really haven't been supply disruptions emanating from it.
I think this, longshoreman strike in LA port and things like that will be, and obviously that hurricane as well is shut down. So based on that strike, and then the East Coast having the hurricane, there's like 5 or 6 of the top 10 major ports in the US are basically going to be shut down. So I think that supply disruption could sort of rattle up some inflation again potentially. But yeah, there's a lot. There's a lot going on. There's a lot to be nervous about. We've obviously got payrolls on Friday. We've got an election coming up. We had an unseasonably strong September as well. So we're very much sort of on the sidelines waiting, because there could be any number of catalysts that could trigger it either way. So we're pretty happy in cash, and then if we obviously see something that's going to keep something that will trigger the market higher, like another 50 basis point cut, well, we've got a plan for that, and we've got a plan for the other side as well. And we've been long gold for a while, so. But I think this is just helping it along. It's sort of, we probably expect a little bit of a pullback in gold at some stage.
Aren't you thankful for Jonathan Takadina and his influence?
Very much so, yes. It's very thankful we have an investment committee and I'm just not making all the decisions. That's for sure.
And just for those new players, only because Mark was this gold skeptic quite some time ago, but Jonathan Takadina has been a big bull, and called it right.
Yeah. And called it beautifully. So we've been on it for quite a while now. And that's the beauty of having committees in different opinions. I might note that silver's up slightly more than gold this year, but it's more that store of value related to the US debt overall, which I think that situation will worsen once the election's out of the way, because everyone's just putting their fingers in their ears at the moment until the election's done. But someone's going to have to deal with that debt, or they're going to be credit downgrades. So, and the ratings agencies they're not going to rate while there's an election on either, but it's just compounding at this point, where it's an even faster pace than expected 6 months ago. So you just hope that someone does something responsible over there at some stage. Otherwise, that's going to cause some more government shutdowns, because we've got we'll have the same old debt ceiling debate and government shutdown argument after the election as well. So
always seems to happen around Thanksgiving, doesn't it?
It does, yeah.
Just getting back to what you mentioned about the dock strike, I mean, there is that real risk that could push inflation higher, just as we're starting to see cuts from the Fed. As you mentioned, there's a lot going on, getting kind of whiplash, trying to ascertain what will be the next move there.
Yeah, look, it's either pain now or pain down the road. I mean, you see the example between how China runs their ports, and it's 5 times faster, 90% cheaper, versus these guys are asking for a 77% pay rise. They're going on strike. The technology's there. I mean, there's always back to Industrial Revolution with the Luddites. There's always resistance to new technology coming in, but it's going to happen at some stage. And so whether they rip the Band-Aid off now, but they're going to have to rip the band off at some stage. It'll be interesting to see how it plays out. And I think it's pretty horribly opportunistic to do that while there's a hurricane. There's people, as a country, the Americans.
Trump supporter, the guy who's leading it.
Yeah, I mean, the Americans generally band together in these situations, and it's, I'm pretty surprised by it, but I guess you use leverage where you can. But they're pretty ridiculous demands. They're holding the country to ransom as it stands at the moment. So. But I guess they're fighting for their jobs.
Yeah.
So people will do rational things. But yeah, it's some of the fixtures I've seen on media. I mean, there's 150 dead or something now in Hurricane Helene, and some of the ports are just devastated. So and there's some of the biggest ports down the coast in around that Carolina region. And I don't know how far the storm stretches north, but obviously New Jersey ports as well are quite massive. So it's really only Seattle, which is a major port that's still open, and Seattle's so far away from everywhere else in terms of transport. So, that could have some serious knock-on effects, and probably will make the Fed maybe just pause and not be so aggressive potentially. but who knows?
So before that, you'd sort of referenced a 50 basis point cut potentially coming from the Fed. Is that what you're hearing from all the commentary?
Well, no, I mean, until like last Friday, I think it was 57%. Since Powell's spoken, it's more like 20. I think what they're trying to do is front load with a higher terminal rate now, which is different to what they've done in the past. So history doesn't really, because obviously there was a bit of panic around, they've only done 50 when there's been an incident or a black swan. I think they're just trying to get ahead of it because they've historically always underestimated how bad unemployment gets. So I think they're going to do less total cuts, front loaded, and give that a try, which is something they've not done before. So be interesting to see how it pans out, and it'll probably throw the economists and the data scientists out of kilter because they won't have any examples from the past. So the economists will be a little bit thrown by it overall, and I think that's what's happened over the last few years. The economists have been really way off, but COVID was such a shock, and that really screws all their models going backwards. So it just another thing to throw a stick in the spokes of the market.
So for our market, what are we just range bound until we start saying Santa Claus rally?
I think it comes down to this Middle East. If it escalates, I think there was about 10 or 15 minutes ago. I think Netanyahu's coming on TV pretty soon and announcing his response. There's rumours of attack within days. And there's a fair bit of US naval movement in the area as well, which is obviously alarming people. And then payrolls. I think payrolls is definitely back as the big dog of the economic numbers, I think everything really is determined by that overall. If we get our first negative number since 2020, it's going to put real shockwaves through the market, I think. Yeah.
All right, Mark. Thank you as always. Mark Gardner from MPC Markets. You were on the call today, Miss. What was the stock of the day?
The stock of the day was Santos, and I had my guests Andrew Whiteland and Henry Jennings weigh in.
Well, I have to say, given the backdrop of what's happening in the Middle East, you'd have to be long some sort of exposure to the oil price at the moment, just as a bit of a hedge in case things do turn a little bit nasty. So I'd probably be a modest buyer here. Certainly wouldn't be selling it. It has got potential upside back up towards $8, but it would need an oil price to be substantially higher, I guess, to achieve that.
So certainly in that energy space, domestically, Woodside's probably our preferred option. If you have Santos, it's not a sell, but what's going to drive it? What's the trigger? So it's a hold.
There was one stock that had those two agreeing today. I won't tell you what it is, but the call is up online, ready for you to watch it. Just go to the series link on our website, ausbiz.com.au.
Having a look at the market leaders today, a lot in the materials space and of course energy players as well. We mentioned that 8.4% jump from Strike Energy. Core Lithium looking good with an 8.7% gain, and Sigma Health, which was your stock of the day yesterday, wasn't it?
Yeah,
up 7%.
It was. It had a good day on market yesterday as well. All right, let's get to some of the laggards. And I'm seeing Megaport on here. I can't see really any particular reason why. Corporate travel as well, down by 3%. On market share buyback coming through today. Guzman and Gomez. Haven't seen that one on the laggards for quite some time. Down by about 3%.
In the smaller end of town, let's have a look at the leaders. Syrah Resources, wow, almost 30% gain. Big Tin Can had a good day. Vinyl, the Tinder of the music industry. It's just made another acquisition, hasn't it?
Yeah, it did yesterday.
Yeah. Winsome Resources and Energy Resources looking good too.
Okay, on the flip side, let's see what's on here. We've got Fonterra yesterday. Had some news from Fonterra, down by 12% today. Race Oncology, it's off by 7.5%.
And coming up tonight, Scuddy's new favourite measure, the US ADP employment report for September, and a number of Fed speakers speaking, as they do as well. We've got Bowman, Barkin, Musalam and Hamak all coming through.
Sorry, Musalam, I'm going to have to familiarise myself with that person. Don't know who they are. All right, let's get to some of the events that are on here tomorrow. It was very quiet around the traps today. with no key data in the wake of yesterday's retail sales result, which you weren't here, Juliette, but apparently we all spent up in August, up by 0.7%. Tomorrow we get new vehicle sales, international trade in goods for August, and a few companies, including New Hope and ARB, trade ex-div.
And St. Louis Fed President Alberto G. Musalem.
All right, thank you for that.
He came in April.
Okay.
So there we go. Every day is a school day. Let's have a look at where the market has finished. A very, very flat session indeed. Be really interesting to see a bit more reaction to a lot of those Chinese listed stocks in the US tonight on those big gains you're seeing in Hong Kong. And I guess we will continue to monitor developments very closely in the Middle East overnight.
Yeah, that risk-off environment has seen yields drop really across the curve. And yeah, keeping our eyes trained to any breaking news coming from the Middle East. Right now, I'm just doing a quick check at about 4:20 here in Sydney, not seeing anything at this time new. You know what I think is going to be interesting to watch tonight is Nike. So speaking of American stocks, after the bell, I don't know if we sort of missed this one today or if you missed it today, Nike withdrew its forecast and also signaled that it expects a weak holiday season. This has got a new CEO who's coming in to try to bring the company back to its glory days. But I thought that was really interesting, saying that the holiday season is likely to be filled with discounts and weak traffic on its website and mobile app. So, I don't know, canary in the coal mine, we'll see.
We'll see. I've done my part. I bought some Nike shoes on some sale the other day.
Yeah.
One of those, I always feel very wealthy at home on the online sales until you see credit card bill.
Yeah,
anyway,
exactly.
That's the story for another day. We'll see you tomorrow.